Hi, I'm Scott Olson, co-founder of LTCshop.com and author of Long-Term Care Insurance Now. This year in 2026, we're sharing 26 client profiles. These are not hypothetical examples. These are real people, real policies, real premiums, real histories, just fake names. Okay. I'll explain why I recommended each policy and how I made that decision with each of the clients. Today, we'll look at John and Mary. John is 65. Mary is 61. They are both highly degreed professionals, and they do consulting work. One in the field of medicine, the other in the field of law. John and Mary are very close to retiring. They have a low 8-figure net worth. Now, John has many of the more common health problems: high blood pressure, high cholesterol, Barrett's esophagus, sleep apnea, and an eye disorder. It only affects part of his vision in one eye, but a few companies would not insure him because of the eye disorder. Mary also has a lot of more common health problems: high cholesterol, gastric reflux, thyroid problems. She's also had some arthritis and some osteoporosis. But she also had a family history of dementia. A close relative of hers had dementia for almost 10 years. I've found that certain professions also tend to buy long-term care policies with no lifetime cap, particularly those in healthcare like physicians and nurses, attorneys who have seen how quickly estates can be wiped out in family quarrels due to poor planning, first responders who see life change in an instant. Cases like that, people often tend to buy policies with no lifetime cap. In this case, I think John and Mary particularly wanted a policy with no lifetime cap because of Mary's family history of a lengthy period of dementia. Now, they are comfortable co-insuring. That means they don't want a policy that will cover every penny of their care expenses. They want a policy that will cover most of the cost of their care. They chose a starting monthly benefit of $5,000 per spouse, and they included a 3% compound inflation protection rider with no cap. That means their benefits will grow automatically every year by 3% compounding. By their mid to late 80s, their monthly benefit is guaranteed to be over $10,000 per month per spouse, and there's no cap on their lifetime benefit amount. No matter how long one or both of them needs long-term care, their policy will never run out of long-term care benefits. Their benefits are fully guaranteed. As consultants with independent contractor income, most of their annual premium will be a deductible expense off the top of their income, according to their tax preparer. Also included in this policy is a death benefit. If they never need care, their children will receive a death benefit of $120,000, income tax free. If they do need care, their premium stops. The entire premium stops. In other words, even if only one spouse needs care, the entire premium stops. If both spouses need care, then the entire premium stops. No premiums are due when benefits are being received from the policy, and the premium is guaranteed level for life. No rate increases, never. They know exactly how much their premium will be for the rest of their lives. For all these benefits, the death benefit and the long-term care benefits, with no lifetime cap, their premium is a little over $1,000 per month. And the biggest reason they bought the policy is because the benefits are in full effect from day one. In the next episode, we'll talk about a client named Drew. She's 76 years old and still running a very successful business. And I'll explain how she bought long-term care benefits with no cap, with just one single premium. All she had to do was move one of her assets from one place to another.